And good morning and welcome to the show. Of course, it is 6:06 on your drive into work on this Wednesday. Here it is, hump day already. I don't know where this week went, but there we go. It's already Wednesday, so just get through today and you're on the downhill slide to the backside of all this. Couple of things going on. Yesterday, very interesting. We talked about this yesterday morning, is that Brexit has been one of these ongoing issues now, of course, for the last several years because of problems with actually trying to structure how to get out of the Eurozone. This has been kind of the big issue, is that despite the fact that these individuals decided to go into the Eurozone to begin with, the problem has ultimately been that they can't figure out how to extract themselves from it. So the issue now becomes, of course, more importantly, not just how to get out of it, but how to do it financially so that they can control the exit process. Again, they tied all themselves together. They threw all of their eggs in one basket, so to speak. And for the last couple of years, after mass immigration, look, and let's go back to why they want to exit. Okay, so this is one thing that's been forgotten over time. When Britain joined the Eurozone, they didn't join completely, right? They didn't become complete members. They kept their own currency. They kept the British pound. They kept some of their sovereignty in place, but they did commit to opening up borders for free trade, etc. Well, come along with that open border policy, of course, came mass immigration into the country. Of course, there's entire districts now of London that have completely changed culture, religion, etc. They elected the first Muslim leader in their country, in the history of the country. So, just a massive change demographically. Well, the concern about the immigration and really the uncontrolled immigration into the country is really that was the foundation for the desire to leave the Eurozone. Now, the mass immigration problem isn't just in London, of course, and then Britain. It's across the entirety of the Eurozone. Germany, as an example, is a country that is now on the brink of recession. Actually, they just printed a recessionary number in their economy, but they've had so much immigration into their country from Muslim countries that in one generation, it's predicted that Germany will be primarily Muslim in terms of a religion. So you're going to change an entire country's culture. Germany, traditionally a very Christian country, changing the entire culture of the country in just one generation because of immigration. The immigration issue has been eroding support for Angela Merkel's chancellorship because of the concerns about illegal immigration to the country, the overwhelming immigration to the country, jobs, economic prosperity, etc. And now Germany's even talking about paying people to leave the country. So, if you're there illegally, hey, great, glad you're here, we'll pay you to leave. So, it's interesting when you take a look at these other countries that are dealing with the impact of unbridled immigration. Now, let me be really clear about something. Immigration is important to any country. Immigration is important to the United States. We have the lowest fertility rate in 40 years in the U.S. So in order to fulfill the needs of productivity and production, in fact, we're going to go a lot into productivity today. We're going to talk about what's happening economically in our country right now. Why does wage growth remain so low? That's going to be one of the topics of discussion this morning. But the point here is that immigration is required for the growth of a country, particularly when you have a demographic shift of an older aging population and a lack of a fertility rate from the individuals coming in. So you have to supplement the aging population with new people in order to keep the economic balance stable. Well, if you don't have the fertility rate, you need immigration. The problem is you need the right type of immigration. We've talked about this before, but you need immigration that is economically beneficial. So you want to immigrate in people that have capital, people that want to create businesses, start new opportunities, people that have education, people that have certain skill sets, doctors, etc. What you don't want is unbridled immigration that is A, uncontrolled, B, is low wage type work, uneducated, unskilled labor, because that erodes the very bottom fabric of the economy. And that's what you're seeing in these countries all across the world. And of course, that is the big concern of the current administration here in the U.S. is this immigration coming in illegally across the borders. That's the whole big debate right now, while we have a shutdown of the government over simply funding a border wall, providing border security. So one thing to remember is that a nation without borders is a nation without sovereignty. Just keep that in mind. So let's talk about markets here, because the markets right now, and of course this whole issue over Brexit completely came apart yesterday. Theresa May suffered a stunning defeat. It is one of the largest defeats in the history of basically a no confidence vote that actually puts Theresa May now in position for a no confidence vote. If a no confidence vote is done in Parliament, that would throw the entire government up into a general election. So there's a lot of concern about where this comes across and how this impacts not only just the part of the Brexit, but also the economy and interest rates, the value of the pound, etc., as really this country kind of goes into a bit of turmoil here. The markets have ignored this over the last couple of days. If you're watching our live stream right now on our YouTube channel, Lance Roberts Show, or on our website at realinvestmentadvice.com, you can click on the podcast, get our live stream right now. You can actually see this chart of the S&P. Yesterday, the market rallied here. We're simply pushing back up into this resistance of these previous bottoms that we had formed back in October, November. The rally was good yesterday, and again, the markets are continuing to rise and really kind of ignoring the news that's happening. We've got weaker economic growth all across the U.S., really globally as well. The ECRI has turned lower here, suggesting much weaker economic growth. And of course, then we've got issues with Brexit and others. This is going on. But most importantly here, for people that have money invested, keep a watch on what's happening here in terms of the market, because we are watching this market rally right now on very steeply declining volume. In other words, the commitment to the market is fading extremely fast, and we're moving up into an area right now where all the volume during the previous selling is we are moving up into that zone right now. So be a little cautious here with your investment allocations. We're going to come back, talk with Michael Liebowitz, CFA. We're going to talk about productivity and why wage growth remains so low in the U.S. That's coming up on the Lance Roberts Show right after this break. Don't go away.
Catch the Lance Roberts Show anytime, day or night, online at lancerobertshow.com.